One of the things that I try and focus people's mind on as they get a bit lost in day-to-day price action is $65 billion of venture capital money went into this space in 2020 and 2021. The products that were built are going to be coming out in this bull market.
Mm-hmm.
So if you remember the last bull market, it's like DeFi, NFTs, social tokens. What's it going to be this time around? We don't know, but there's going to be a lot of stuff because a lot of money went into some really smart teams who were building all sorts of applications and ecosystems.
Former hedge fund manager Raoul has made a bold statement about Bitcoin and the entire cryptocurrency market. Powell, who is known to be vocal about his sentiments on the market, is positive that Bitcoin, along with the rest of the crypto market, will experience a mega bull run in the near term. Powell made this known in a recent interview on the Real Vision Crypto Media as he asserted that the market is imitating bullish patterns from the 2015 and 2016 cycle. Powell claims that the current market is mirroring a structure similar to that time. As he further explains, in 2019, the market started on a bullish note and saw a 300% pump over a period of time. The market later experienced a massive decline and eventually rallied by more than 700% within a short period. The market should expect to see more chaos within the banking sector, which will cause the Federal Reserve to intervene, Powell asserted. Speculations about a crypto rally have made quite the round in the space, especially following the Ripple case and the increased possibility of a Bitcoin ETF. In this video, Raoul discusses the BlackRock ETF, his stance on Bitcoin, and why he thinks Solana is the next big thing. He also gives his advice to crypto maxis and enthusiasts about mid-curving the crypto market. Let's us now get into the video.
I know nothing is that Gary Gensler was under a lot of fire politically because of saying no, 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 no to everything. And he had said that Bitcoin was not a security. So therefore, it becomes really difficult not to allow or to appease the politicians by saying, look, I've passed the bloody Bitcoin ETF. At least I've done something. You know, I'm comfortable with Bitcoin. So my guess is he gave the nod to BlackRock and said, listen, I need to do something. We're going to do this. And they've obviously have an open conversation with the SEC. The SEC had given the guidance as we will accept this if you do this. So they all did it. What was really amazing within that, bit of humble pie, that the SEC is suing Coinbase while at the same time are going to approve them as a major part of the mechanism of the ETF. And it kind of shows the incongruity of this ridiculous situation they found themselves in. Then you add the XRP ruling, and it makes it really hard for them to stop some of this stuff. So, you know, I think Gensler probably comes under more political pressure because of what's just happened as well. It kind of fuels the politicians, the pro-crypto politicians were like, this is not sustainable. And Gensler's opinion appears to be wrong. So the overreach argument. So overall, these are really good things for the space. Now, the Bitcoin ETF, I've always said the ETF doesn't matter unless the market has momentum. If it has momentum, it becomes a sucking sound of bringing in RAAs in the United States and individual investors and pension plans and others. And lo and behold, we're in the middle of crypto spring where things are starting to really warm up. And that sound of FOMO you hear in the distance is thundering closer and closer. And that's going to bring these people in. So if we continue the way we've been going and prices are rising, and let's say Bitcoin's at 40,000 by the time the ETF comes in, there's going to be a blind panic because everybody kind of knows that it's very cyclical as an asset. And that when the cycle goes, it can have tremendous returns. So I think that's going to be in the back of many people's minds who are out of the market right now. With the Bitcoin ETF, they're going to be more enticed by it. So look, it is very positive. And that capital flow that comes into the space, let's say $10 billion comes in the ETF, whatever, that money then flows into the space. People take profit in their original Bitcoin and gets reinvested into ETH or Solana or whatever else. And then before you know it, recycles into NFTs because all of these digital assets is a kind of global economy, a separate global economy made up of smaller economies like ETH and Bitcoin. And once you have new foreign direct investment into an economy, things boom. And that's what's going to happen. My view for a long time is while I like Bitcoin, I'm more predisposed towards the broader ecosystem itself, because I think the whole of Web3 and crypto is a much larger thing than just a store of value money component, which is an important part of that in itself. And so therefore I've tended to have ETH as my larger bet. And I've had that for a long time because my thesis is these things are all valued on Metcalfe's law, which is network effects. And that's the number of people who use it and then the number of applications really that go on. Now, ETH's equation within that is there's actually more users. The amount of activity is higher because of all the applications, but the sizes of the transactions are smaller. But because so much is being built on top, the network effects grow over time. So over time, I expect it to outperform. But in each bull market, there's another something that does really well. And my eye is on Solana because it's got a large ecosystem, a lot of developer activity, a lot of applications layer tools. Now, does that work or not? I don't really know, but I think it's a reasonable probability bet that it's like kind of ETH was in 2018-19, came from the dust down 97% and survived. You know, the Lindy effect of surviving a massive bear market, you know, with all the FTX stuff is a good thing. Could it be another ecosystem that takes fire? Of course, and many will.
The number of applications, along with BlackRock's status as a financial powerhouse, have spurred optimism in the crypto space that a Bitcoin ETF will be approved in the United States, something that Canada, for example, has already done. A report by the Financial Times on Thursday unveiled that Europe expects its first Bitcoin ETF by the end of July. The product, which is on track to be publicly listed by Jacobi Asset Management after a year-long delay, has been authorized in the Channel Island jurisdiction of Guernsey to avoid regulatory hurdles in the European Union.
What happens with the broad basket for me is I don't focus on any of it. So some stuff pumps and I don't take profits, and other stuff, it's not big enough, so it just falls and you don't notice it. So I actually find I operate better with concentrated bets. So really, yes, I've still got a small basket of stuff that I own, maybe 5 or 6. Really, it's all in 2. It's all in ETH and Solana. And then I have a bunch of NFTs on top. And I think that's a relatively safe bet of ETH with a slightly riskier bet of Solana, but not too risky. And I actually, you know, I thought long and hard about this in the last bull market. And I thought it is too complicated a world now. And you have to be too technical and you need to be on top of too many things. This is not a Bitcoin ETH only world. So I actually started a asset management firm called Exponential Age Asset Management, which is a fund of hedge funds that invests in digital asset hedge funds, because those guys, it's their job to find the small token that goes up 500x. Right? I can't do that. I just don't have the time or the experience, but it's their job. So the idea is to create a vehicle, a fund of fund vehicle, to allow investors, high net worth investors, family offices, institutions to have a broad, diversified portfolio of hedge funds that can manage that side of the equation. Because I just realized I'm just not smart enough. As you know, it's so time consuming. You can go down any rabbit hole in this space and it'll consume 24 hours a day, 7 days a week. So I've become more focused, more concentrated, use hedge funds for the other side of it. If you're happy to manage a broad, equally weighted basket, you can do that too. I tried it. I just couldn't do it. I just didn't focus on any of it. And so I just didn't do a good job with it. What you need to do is stick with what you've got. As you said, you've got the tailwind of a secular bull market. Now, the advice I do give some people like adrenaline. They like to trade. In that case, keep 80% locked away on your ledger device or wherever you keep it, and then keep yourself a small portfolio of 10% or 20% where you can be in filthy degen and trade anything you want. You can hold as much Pepe as you want. You can blow up. You can do whatever. And that can appease that FOMO thing, because you can always tell yourself the lie that you're going to make this 10% worth more than the rest of the portfolio because you're the best trader in the world. You won't. You'll lose most of your money, but at least you're not screwing it up. My worst year ever was 2009, because I even ignored all of my economic work, all of my work, because I knew that it was all going to come to an end in an even bigger way. Obviously, I was wrong, and I screwed it up badly. It stopped me even being able to buy equities for a long time, because I just always had the fear that it was going to go wrong when the answer was just buy equities, right? You know, I was really mid-curving the whole thing. And in 2020, I got it right. So I closed all of my equity short positions and stuff and went long crypto and other stuff. Didn't buy much equity because I've still struggled, but I knew I had to learn to do that, because this is my own behavioral bias. Yeah. And I managed to start averaging in technology stocks over the summer, and then really pulled the trigger on everything in November, December, January, February, March. and got the whole lot. I mean, got the NASDAQ and Tesla and Apple and semiconductors and the lot, because I finally got over my bias, because my forward-looking indicators were giving me everything I needed to do. I just needed to drop that bias, that the PTSD bias, and say, my time horizon is longer. I know what I'm doing. Stick with your work. You've been doing this a long time. Bye. And it worked.
The Financial Stability Board, FSB, said in its latest crypto asset report that the sector needs to see more disclosures on the part of providers and broader cooperation from regulators across the globe. FSB, tasked by the G20 to come up with a comprehensive framework for crypto regulation, has published 2 sets of recommendations. The first set relates to the global approach to crypto regulation, including the supervision and oversight of digital asset activities and markets. Meanwhile, the second set of recommendations focuses on global stablecoin regulation. The framework comes after a tumultuous year for crypto going back to the summer of 2022, and the FSB says it strengthened the recommendations with the events in mind. Among these are the dramatic collapse of Terra USD and the implosion of cryptocurrency exchange FTX. As a result, 3 of the key areas with greater focus are safeguarding client assets, addressing concerns around conflicts of interest, and strengthening cross-border cooperation among regulators. In total, the watchdog has outlined 9 key recommendations for the global framework for the regulation of crypto asset activities and markets and 10 for the regulation and oversight of stable coins. One of the recommendations on the regulation of crypto asset activities focuses on disclosures, and FSB stated, authorities should require that crypto asset issuers and service providers disclose to users and relevant stakeholders comprehensive, clear, and transparent information regarding their governance framework, operations, risk profiles, and financial conditions, as well as the products they provide and activities they conduct. In the press release, FSB noted that the final recommendations in the 2 documents incorporated the lessons picked from events within the crypto market over the past year. They also include feedback collated during the public consultation. The European Union and the United Kingdom are among the jurisdictions to pursue comprehensive regulation for crypto asset activities and stable coins. The European Union's markets and crypto assets MiCA regulation is expected to take effect in 2024, while United Kingdom's Financial Services and Markets Acts received royal assent in June following approval by Parliament. As reported in April, the United Kingdom could deploy its crypto laws by early 2024 as it looks to become a crypto hub. Do you think the bull market is up? Let us know your thoughts in the comment section below. Also, make sure to like this video, subscribe, and turn on notifications.